Yesterday we saw defense as one of the sector which was up as well.
Yeah, hi, good morning. Some of the pullback action which we have witnessed in the previous trading session, though most of the stocks have shown similar kind of behavior in the last couple of days after a correction. Now, stocks are showing sign of recovery from the lower level. If you look at the HL, stock has formed a bottom at around 4,000 level and recovery is taking place. Looking at the near term, short term structure, I think 4320, 4400 is the important level to watch for. If stocks able to sustain above these level, I think we could see furthermore, continuation of up move and then possible target towards 4500 we may see in the HL. Again, BL is looking very strong from this basket, and the way BL is holding all this volatility in this kind of market, I think BL has potential to extend its gain. Possible target towards 470, 480. We may see on the positional perspective. So BL is buy and accumulate stock from defense basket. On the downside, 410 needs to keep as a stop loss to buy and hold BL also.
Okay, so that's the take coming in on some of the defense names. That's of course Rajesh Palviya, the head technical and derivative research at Axis, who's joined us. Rajesh, good morning and thanks for that view. Talk to us about your take on Titan. We have a brokerage note coming in this morning from Morgan Stanley, wherein they continue to be overweight on the stock, but they have significantly hiked the target price for Titan to 4,529 rupees from 4,062 earlier. Very significant upside to the target price. On the charts, does it look like Titan is headed in this direction anytime soon? What are some levels that you're spotting?
So Titan is a wealth creator stock over a period of time, and looking at the long-term, short-term structure, stock is holding the strength, and the way stock has formed a bottom at around 3,900 kind of zone, and strong recovery took place from those level. Looking at the near-term, short-term structure, yes, stock is holding the strength, and stock is almost hovering around its all-time high trajectory only. We do hold our bullish view for the Titan. Any minor decline should be used as a buying opportunity till stock is trading above 4,039 level. I think any minor decline should be used as a buying opportunity. Possible target on a higher side towards 4,400 to 4,500 going forward. So Titan, yes, one can buy and accumulate. We hold our bullish view for 4,400 to 4,500 target.
Kunal, in the earnings season, we've seen consumer services doing much better there. Some of the FMCG companies, ITC, HUL, Marico, how are they looking for you on the charts?
So, they seem to have bottomed out in terms of price trend. So, ITC, for example, the lowest level was around the 300 to 303 odd mark. That was the low the stock had made. After that, almost like a 20% or a 30% correction for ITC in the recent past. HUL around 2150, 2200 was a recent low the stock has made. It's moved up almost, I think, initially towards 2400, 2450 mark, and it's now come back towards 2300 levels thereabouts. Colgate, I think that stock has also moved down from those 2000, 2050 levels. So these stocks have moved up higher from their recent bottom. But there are these chunk of stocks which are still at the lower end of the price trends, which are below their 200 DMS, HUL, Colgate, ITC, etc. And there are these other names like Britannia, Nestle. These are the stocks which have done very well for themselves, and they're trading above their long-term moving averages. So it's like a completely scattered move across the FMCG pack. The leaders are getting stronger. Godrej Consumers, I think, is the other stock which has looked quite strong. Tata Consumers is at par at the long-term moving averages. So it's scattered across the pack for the FMCG pack. But from the price perspective, from the risk reward perspective, yes, the trade looks a little bit more better in terms of the ones which have been underperformers. That maybe, I think, if the sector starts to show signs of strength, you might see these underperformers picking up pace. But I would believe that the strategy has to be two-pronged. You have to look at underperformers like HUL as well as Colgate, etc., which could be decent bets in terms of risk reward. But then names like Britannia and Nestle, etc., I think these stocks which have done very well for themselves, they could also be something which should be part of your FMCG portfolio, even if it's a trading bet.
Okay, so that's on some of the FMCG names. Deepan, talk to us about the entire wires and cable space. So much has happened in that space. Largely, Q3 earnings have been good for them. Copper prices are now turning favorable once again after that kind of high that we saw on the LME copper. But also, the other factor to watch out for here is the kind of new entrants and the new participation that we're seeing in this space. What is your outlook here? Are you looking at any type of consolidation in the near future? Do you believe that the existing companies, the names like Havells, KEI, Polycab, they're placed very strongly? Is that your view?
Yeah, I think the numbers coming from the cable industry certainly seem to surprise us quarter after quarter. And despite such increases in copper prices, they've been able to pass on the price increases and improve their margins as well. A lot of these have built solid brands, and that's going to be difficult for new entrants to copy over there. And most importantly, I think the industry is doing well because of this investment which we are doing in renewable energy, which requires far more transmission, copper cables, and then there's also this industrialization taking place, data centers, all of which improve the demand for cables. So I would remain invested. Only reason it's not a buy for us because the valuations are very rich. They're all trading at anywhere from 40 to 60 times or so, which is on the expensive side, considering it's a largely a kind of a B2B business, and there's no real product differentiation over there. Sure, brand plays a role, but it's not the key factor for USP per se. So I would remain invested. I said that's because the numbers keep coming through excellently quarter after quarter, but valuations are on the higher side for a business like this.
Okay, so that's on the wires and cables industry. Deepan, on that note, we'll let you go. Thanks so much for joining us with your views and your insights this morning. Thanks so much. Shifting focus once again to the technicals then, time to get some mid-cap ideas out of the way. Let's take it across to Rajesh. Rajesh, what's looking good from the broader end of the market? Anything looking very steady on the charts?
See, I think PSU banking basket is looking quite interesting, and the way most of the PSU banking stocks are showing sign of strength, I think Union Bank one can focus on. The way stock is moving in higher top, higher bottom formation on daily, weekly time frame, it's clearly sign of sustained buying action is taking place. So I think Union Bank one can focus on the higher side. 198 to 200 would be the next target for the counter. Buy and accumulate would be the strategy. 184 needs to keep a stop loss at this juncture. Another stock where we are focusing is KEI industry. Here also we have seen that stock is now negotiating with its immediate resistance area, which is placed at around 45.80 kind of zone. Any breakout above 45.80 can take this stock further higher to 47.50 kind of zone. So KEI industries also buy on the downside. 4500 needs to keep as a stop loss.
Kunal, your picks for this morning?
So again, even I have Union Bank as a buy because I think there are only two major PSU banking names or the mid-cap and the banking stocks which are looking very attractive. One is Indian Bank and the other is Union Bank. I think both of these stocks have done phenomenally well. And I think on the recent past also, we've seen that very few PSU banking stocks like SBI, of course, on the large cap front, have given breakouts for themselves of their swing resistances. So I believe Union Bank is one of the few stocks in that category. Would suggest a buy with 195 as a target, stop us at 185.
Markets and talking about the big bold brokerage call for the day, that's LG Electronics India. The stock is in focus after Goldman Sachs has initiated coverage with the buy rating. Pre-open rates looking rather good for LG Electronics. Now, Goldman Sachs has cited strong category leadership, premium positioning and faster than industry growth. Mitali is joining us with the highlights of this note. Mitali.
So Goldman Sachs has given a buy rating to LG Electronics, setting a target price of 1750 rupees. That is implying a 15% of upside potential on the stock. Now the brokerage believes that LG is well positioned to outpace the industry growth, driven by rising premiumization, improving income mix and also increasing its product penetration. Now its strong innovation, track record and parent LG Electronics Global South strategy could also boost exports and scale from India. However, on the contrary, Goldman Sachs cautions that rising competition and potentially firm commodity price movement may also limit meaningful margin expansion for the company going forward. On the valuations front, if you see, the stock is meaningfully valued at 44 times FY28 earnings, reflecting confidence in its earning visibility and also growth potential. So overall, if you see, the brokerage sees LG Electronics India as a structurally strong consumer play with premium positions and also export optionality, but with margins which are likely to remain range bound.
Okay, thank you so much for that, Mitali. That's of course on LG Electronics. Consumer durables, Rajesh, is that at all on your radar with regard to any of the stocks within that basket looking interesting?
I think even LG Electronics is also looking promising. The way stock is showing sign of strength since last couple of weeks, and stock has recovered from the lower level. Now stock is sustaining about to 20-day, 50-day moving average. Looking at the near-term, short-term structure, I think if stock able to take out over 1580 zone, I think here we could see good traction on the higher side and possible up move towards 1650 we could see on a near-term perspective. Again, Voltas is also showing sign of strength. Stock managed to give breakout of on the long-term chart also. After a long consolidation, stock managed to give breakout on the monthly as well as on the weekly chart. Here also we hold our bullish view and we believe that 1600 to 1640 would be the next target. Buy and accumulate would be the strategy. On the downside, 1490 needs to keep as a stop loss.
Okay, so that's on Voltas and some of the consumer durable space that we're talking about. Shifting focus, Ventive Hospitality is also a stock in focus to watch out for trade. They've completed the acquisition of Finest BN Business Park for about 60 crore rupees, securing exclusive rights for Soho House expansion in India and the operations of the existing Soho House in Mumbai. This is something that they have been working towards for a very long time now, and this deal is done for 60 crore rupees. So that's Ventive Hospitality. But Kunal, this is one of the smaller names when it comes to the hospitality space. Leaving aside the big ones like your ITC and Indian hotels, ITC hotels and Indian hotels is what I mean. Anything from Chalet, Lemon Tree hotels, anything looking good from these mid-cap hospitality names?
Not as of now, but I think yes, these stocks had a point where the price trends was extremely attractive. Chalet Hotels at 850 levels where it's trading right now. I think Lemon Tree at 125, 126 levels. They've gone through a sharpish correction. I call it sharpish because these stocks have not been prone to this kind of a recent correction where you see these stocks falling by 30% to 40% broadly. I think Lemon Tree, for example, was almost at 170, 75 just about 2-3 months back, and that stock has fallen down to almost 120, 125 kind of a zone. So the selling has been a little bit more steep for these stocks, and that's why I would believe that the recovery would probably take some bit of more time. In ideal scenario for a price correction is that when these stocks see such kind of a sharp selling pressure, you see these stocks going to a multi-month consolidation. Maybe for another couple of months, you might see these stocks plateauing out at 125 levels, etc. for Lemon Tree, 850, 900 zone for Chalet Hotels. And then you might see these prices coming back into an uptrending mode. But that uptrend will also be a little bit more gradual. So price-wise, risk-reward-wise, attractive. But I think the momentum would probably lack because there is a very strong probability that I would expect that these stocks would go into a multi-month consolidation first from current levels.
Okay, so that's with regard to some of the hospitality counters. Kunal, I wonder, some of the big movers of yesterday. I want to quickly highlight some of those. Hindalco, for example, was down 2%. Now, I know that that's not a really big mover, but the metals basket in general was also under some bit of pressure. So let me throw in a Hindustan Copper, Nalco, Hindustan Zinc. What's the take with regard to metals going forward?
See, I think Hindustan Copper and Zinc, they would probably be a little bit more into a pressure or a corrective wave because there's not too much happening across the global asset classes. And the prices of both of these stocks have been influenced more or less by what's happened across the copper as well as silver price movement across the last, I think, 3-6 months predominantly. So I would believe that there could be a point where these stocks may go into a time-wise consolidation. I don't see an immediate pickup of trend for these stocks. And that's why I think you've seen the ranges for these stocks. We call it the ATR, the average to range for the stocks. That has fallen down significantly. Just to give you a stat, I think till last month, Jan end somewhere, the ATR for Hindustan Zinc was almost like a 4%, 5% on a daily basis. That range has now gotten down to sub 1% for the stock price. So that's how the stocks, they tend to behave when these stocks go into a time-wise consolidation or go into a price reversal of sorts. So I don't expect too much of a pickup of price trend for either of these two names. But yes, from the traditional metal pack, I would still be very bullish on the likes of Hindalco, Tata Steel, even to a larger extent names like Jindal Steel, JSPL. So I think all three, four stocks, I think they look fairly attractive, fairly strong. We are looking at a point where these metal stocks have given major breakouts on the upside, breaking past about their previous lifetime highs in many cases, swing resistances, 200 DMAs, etc. And these are very strong indicator breakouts, which have not just happened on the daily charts, but it's more trickled into the monthly and the quarterly charts for many of these names. That's why I believe that the longevity or the shelf life of this breakout could be a little bit more stronger and longer for these names. So I would be bullish on the traditional metal stocks as of now.
Okay, bullish outlook on some of the metal names. Rajesh, about a couple minutes left for markets to open. In the pre-open, we're absolutely flat on the Nifty with a very mild hint of a positive bias. One stock, very quickly, wanted your view on Dilip Buildcon. It has spiked up about 5 to 5.5% in the pre-open on the back of a 702 crore rupee order that it has bagged in Gujarat. A quick chart check on this one.
So stock was in downtrend, but looking at this gap up opening, I think if it's stock able to hold above 440 level after this opening, I think some follow-up buying action we may witness in this counter. Possible target towards 470, 475 we may see in the near-term perspective. Keep stop loss of 440 if you are on the long side of trade.
Okay. What about capital markets, Kunal? Any of those stocks finding favor in your portfolio at this point?
Yeah, I think BSE, MCX, I would still believe
Still bullish.
they're the best stocks in the portfolios in that sense. The beta is average for these stocks.
Correct.
They are not trying to establish a trend for themselves. The trend is already established on the upside, and the best part is that they've gone through a sweet correction over the last 1 week, 10-15 days. I think a 15% or 10% correction for names like BSE and MCX is something which has already happened. So that makes a trade a lot more attractive for these names. So that's why I would go with these traditional capital market spaces. Yes, there would be a point where Angel One, JM Financial, etc., the broking houses, they would start to look attractive. But my first preference would be more towards MCX and BC.
Okay, and Rajesh, if I were to request or allow you to guess one trend or one sector that's going to outperform in 2026, what would that be in your opinion?
I think banking and financial would be the sector where we may see continuity of uptrend, and here also here we may see outperformance going in this 2026. So banking and financial one can remain on the long side.
Okay.